I wanted to do a video on escrow accounts for property taxes and homeowners insurance and explain this in advance of closing to help clarify things. First, let's take homeowners insurance. As you can see, this form is a closing disclosure. I'm focused on this is the second page under other costs. Category F for prepaids, category G for the initial escrow payment. Looking at homeowners insurance, on this particular closing, they're taking 12 months under F for prepaids. And then under G, they're taking under O1, they're taking another 3 months for 15 months total. That seems excessive. Here's where that 15 months comes from. This particular closing is closing on June 21st, 2023. So their homeowners insurance is going to roll over every June 21st. Your first payment on the mortgage in this instance won't be due until August 1st. Why? Because a mortgage is paid in arrears. It's paid backwards. So August 1 mortgage payment due date is actually for July. You can see here they're collecting interest from June 21 to July 1. So August 1 starts the full mortgage payments for July, September 1 for August, and so on. Since you're not making a full mortgage payment to the new lender until August 1st, by the time June of next year rolls around, you will have only made 10 payments. So to pay the second year bill from June 21, 2024 to June 21, 2025, you'll be short 2 months. You'll have made 10 payments to the lender. You'll be short 2 months. So there's the 3. So 12, you're paying for the first year in advance from June 21, 2023 to June 21, 2024. The 3 covers 2 months of the shortage for the next bill, June 21, 2024 to June 21, 2025. However, wait, that's only 14 months. Why are we collecting 15? So you're paying 1 extra month as a pad or a cushion because over time your insurance bills will go up as the property value goes up. So they take a small pad up front at closing. So out of 15 months, 12 months is to pay the first year in advance. 2 months is to pay the shortage to have a complete 12 months on the second year installment. And then there's a 1 month pad. This is the same concept for property taxes. Now, this particular property happens to be in Washington, D.C. Property taxes are due in Washington, D.C. October and then again in March. So if we're going to closing in June and you've got a first payment due August 1, by the time the next tax bill comes due October of this year, you will have made an August payment, September, and then October 1, a 6-month tax bill is due in the district because the Washington, D.C., the taxes are due biannually. Well, if you've only paid 3 months worth, we'll be short 3, and we're going to be collecting for the next month's bill and the pad. So same concept. You can see here they're collecting nothing under prepaids, 0 months. Under GO3, they're collecting 6 months. So 6 months in advance goes for the 3 months we're going to be short on the October tax bill. It's a 6-month bill. We will have only collected 3. They collect another couple of months towards the next bill, and then they collect a pad. So you're always ahead of the curve on your tax and insurance bills. So at some point, whenever you sell the property, you're due a refund, depending on where you are in the tax cycle and the insurance billing cycle. You'll be due a refund of a certain amount of unused property taxes sitting in escrow and a certain amount of unused homeowners insurance sitting in escrow. The last thing to explain, a lot of people ask, what's this aggregate adjustment? Negative $450. I can tell you the textbook definition is an aggregate adjustment is a credit to the buyer for an amount that is in excess of what's allowed to be collected at closing. This credit simply reduces the amount collected for the escrow account and is a line item on the CD. What they're saying in English is if the lender is collecting too much up here, they make a credit down here to bring it in line with what's legally allowed to be collected. Now, logic would indicate, well, why don't they just collect a little less up here and not, debit and then credit? For whatever reason, for some accounting reason, they collect what they think they need to collect up here. There's some formula that someone goes through, and then there's sometimes an aggregate adjustment or a credit to you to even this out because it goes a little bit overboard, which in this case I think might have been for the property taxes. Anyway, that's an explanation of why the amounts collected at closing for escrows for homeowners insurance and property taxes are collected. I hope that makes sense. Please let me know if you have any questions.